Today we're going to wrap up Chapter 14. We're going to play what I call the first and last game. More correctly, it's cutoff as of December 31st, 2021. We're going to start with credit sales. We're concerned about overstatement. We're concerned about occurrence. We will audit the last 25 entries in the sales journal prior to December 31st, 21. Okay, so we're going to audit these guys to the blue. We're going to vouch from the sales journal to supporting documents to the invoice, the shipping document, sales order, customer order, purchase order, to have evidence that the sale actually occurred. If we can vouch the last 25 entries in the December 21 sales journal to shipping documents dated on or before December 31st, 21, we'll have evidence that they satisfied the performance obligation and can recognize the revenue in 2021. The transaction occurred in 2021. If we vouch the last 25 entries in the December 21 sales journal to shipping documents dated on or after January 1st, 22, we have evidence that they did not satisfy the performance obligation in 21, and they should not recognize the revenue in 2021. We're going out to the loading dock now, and we're going to assume for our world that there's a time clock there, and if a shipping document is dated 12/31/21, we can assume it was actually shipped in December of 2021. These to the left of this black divider are shipping documents dated December of 2021. To the right of this black divider are shipping documents dated January of 2022. Notice they're color-coded, so we're going to pretend that the shipping documents for 2021 are blue and the shipping documents for 2022 are green. Here's what we're worried about. We're worried that goods that were shipped in January of 2022 got recorded as 2021 sales. We're out at the shipping dock now. We're concerned that sales are overstated. We're concerned with occurrence. Okay, we'll audit the first 25 orders that were actually shipped after January 1st, 2022. Goods that were shipped in December of 2021 aren't going to cause a problem. If they were shipped in 21, they should be recorded as sales in 21, and they're not going to cause overstatement. If we trace goods shipped in January of 22 into the 21 sales journal, then we have evidence that 21 sales are overstated. If you trace goods shipped in January of 22 into the 22 sales journal, then you have evidence the transaction was recorded in the correct period. Again, we've got our blue-green. This is what we're worried about. We're worried that they recorded as 2021 sales goods that were not actually shipped until January of 22. Oh, am I still responsible for audit reports? Yep. We find material misstatements while performing our substantive test. The client agrees to make and does in fact make the necessary corrections. Then we'll issue a standard unmodified report. I need to remember what the reports are. Unmodified opinion. In fact, standard report means everything's the same. I'm not going to change anything if it's a standard report. We find material misstatements while performing our substantive test. The client refuses to make the necessary changes, so we're going to either issue a qualified opinion or an adverse opinion. If the mistake can be compartmentalized, we'll issue a qualified opinion. The first paragraph will be the same. We have audited the financial statements in our opinion, except for the effects of the matter discussed in the basis for opinion paragraph. The financial statements present fairly. Then in the basis for opinion section, we'll add a paragraph explaining what the issue was. We'll also have our standard basis for opinion paragraph. We conduct our audit in accordance with auditing standards. We believe the audit evidence we have obtained is sufficient and appropriate to provide a basis for our qualified opinion. We don't need an emphasis of matter paragraph. Responsibilities of management paragraph never changes. There's no need to make any changes to the auditor's responsibility section in this instance. If the misstatement cannot be compartmentalized, if it's pervasive, then we'll express an adverse opinion. First paragraph's the same. Opinion paragraph, in our opinion, because of the significance of the matter discussed in the basis for opinion section, the financial statements do not present fairly. The basis for opinion will add a paragraph explaining the issue. Again, we'll have our standard basis for opinion paragraph here. We conduct our audit in accordance with auditing standards. Our evidence is sufficient and appropriate to provide a basis for our opinion. No need for emphasis of matter. No need to change anything in the management responsibility or auditor responsibility sections. Please notice, if the substantive test detect a material misstatement, then their internal controls are not effective. Their internal controls fail to either fail to prevent or fail to detect and correct a misstatement. This has implications if it's a public client. We're going to do cash cutoff. We're concerned cash receipts. We're going to treat cash as if it's two accounts. We're going to audit cash receipts. We're going to audit cash disbursements. With cash receipts, we're concerned with overstatement and occurrence. We'll audit the last 25 entries in the December 21 cash receipts journal. Primarily, we're going to worry about the bank statement. We're going to vouch from the cash receipts journal to the bank statement. If we can vouch the last 25 entries in December 21 cash receipts journal into the December 21 bank statement, we have evidence from an external source that they actually received the cash in 21. The transaction occurred in 2021. If we vouch the last 25 entries in the December cash receipts journal to the January 2022 bank statement, then we have evidence that the cash receipt did not actually occur in 2021. There's one little exception here. It's likely that the cash received on December 31st of 2021 is a deposit in transit and won't appear on the bank statement until January 2nd of 2022. So that last deposit in transit, we have to be aware of that. If we vouch the last 25 entries in December's cash receipts journal to the January 2022 bank statement, we have evidence cash receipts and cash are overstated. Don't forget about that one deposit transit. We're worried about this guy. Did these guys actually occur prior to December 31st? Cash disbursements now. Now, with cash disbursements, we're worried about understatement and completeness. We're going to audit the first 25 entries in the January 2022 Cash Disbursements Journal. The first 25 entries in the January 2022 Cash Disbursements Journal. We're going to vouch from the January 2022 Cash Disbursements Journal to supporting documents. The December 21 bank statement or the January 2022 bank statement. If a check from the January 22 Cash Disbursements Journal appears on the December 21 bank statement, we have evidence from an external source that they wrote the check in 21. The transaction was recorded in 21, and 21's Cash Disbursements Journal are not complete. Okay. This evidence provides evidence that the 21 Cash Disbursements Journal is understated, and 21 or cash is overstated as of December 31st, 21. If a check from the January 22 Cash Disbursements Journal appears on the January 22 bank statement, it provides some limited evidence that they actually wrote the check in 2022. The reason I say some limited evidence is most checks written late in December 29th, 30th, 31st, won't actually clear the bank until January of 2022. Here's what we're worried about. We're worried about these guys. Okay, they recorded them in 2022, but we want to make sure they did not write them in 2021.